you, Laurel, for that gracious introduction. And I'm happy to be here with everyone today. So crowdfunding, right? It is a serious way to raise serious capital. Even before the recent pullback in VC funding, crowdfunding has established itself as a proven way for businesses to raise capital directly from its fans, right, from its fan base. We all know that here today. But as we will discuss over the next few minutes, blockchain technology specifically can, will, and is making crowdfunding an even more powerful way for businesses to raise capital and for the individual investors to participate in this growth. If you haven't heard of Securitize, we run an end-to-end platform where businesses can compliantly raise capital from both retail and institutional investors, as well as access liquidity on our ATS. We onboard investors, we verify their identities, we process investment funding, we issue and manage shares, and then finally, we enable secondary liquidity, right? A very hot topic at this conference. And we do all of this by converting traditional paper-based processes of the past into DocuSign and automated smart contracts, and paper or Excel-based cap tables into digital securities issued on the blockchain. There's been so much chatter over the past year about blockchain. There is a lot of hype, different types of jargon, but mostly lots of confusion. To say nothing of what is a cryptocurrency versus an NFT versus what we are talking about today, regulated, tokenized securities. So what I'd like to do for a few minutes is to talk about what we see at Securitize as the real substance and the future of blockchain and tokenized crowdfunding and why it matters to you. So what is blockchain, all right? And how is Securitize using blockchain to contribute to Web3? In short, blockchain technology is reinventing the fabric of the internet by transforming the way that value is created, stored, and transferred online. The implications of this transformation cannot be overstated, and it's become a global movement that has taken on the moniker of Web3. The Securitize firmly believes that the blockchain's auditability, security, and programmability create an ideal foundation for future-proofing financial services. We're digitally transforming the private markets, which are notoriously illiquid, inefficient, and expensive, with digital asset securities by using the blockchain and other Web3-related technologies. A bold claim, I know, but let's get into the details, and I'll try and validate that claim. Back to the original query, what is blockchain? And how is Securitize using this to contribute to Web3? A blockchain is a distributed database structure that records transactions on a digital ledger, providing users with a secure and a transparent history of events. All right, simplified way of saying it. In our ever-increasing digital world, where countless amounts of data are vulnerable to alteration and theft, a blockchain composition provides enhanced transaction security and assurances to its users. Securitize uses blockchain technology as a medium to transform traditional securities like debt and like equity into cryptographically secured digital tokens. I was most worried about the word cryptographically. I'm glad that I got that one. That's the toughest one in the whole. These digital asset securities can be issued and transferred across Web3, and Securitize's business ecosystem, right? So our business ecosystem is comprised of an SEC-registered transfer agent, right? A FINRA member broker-dealer, and our alternative trading system, right? At the forefront of that, something that we call Securitize ID, which is our identity management platform, making digital asset securities compatible with both the current version of the internet and the traditional financial systems. Securitize, in essence, acting as the bridge between the old world and the new world. So digital asset securities, right? They're designed to represent ownership on blockchain networks and offer the same advantages as conventional securities recorded typically in book entry form. However, digital asset securities really do distinguish themselves through programmability and, by extension, interoperability with Web3. Terms and conditions can be programmatically embedded into the base layer, ensuring proper adherence to identity jurisdiction and asset category restrictions worldwide. Digital asset securities offer robust supervisory controls, making them an ideal mechanism for managing a multitude of regulatory jurisdictions while fundraising. Governing laws and regulations are embedded into the protocol layer, providing adaptability and flexibility. A coded framework of preventative and detective controls help mitigate all of the impacts of risk, leading to decreased compliance costs. As coded frameworks reduce compliance expenses, digital asset securities help streamline the facilitation of cross-border fundraising on Web3. When paired with smart contracts, blockchain-based digital asset securities can certify strict adherence to applicable regulations while executing life cycle events and corporate actions, such as voting, dividends, share buybacks, and transfers of ownership. The resulting decrease in the governance and compliance related frictions, they allow for the facilitation of community-based fundraising for businesses. By serving as a hybrid investment instrument, agreement, contracts, and vehicles, digital asset securities can ensure the proper migration of today's financial laws and regulations to the new digital economy. As such, the usage of digital asset securities is projected to grow exponentially over the coming decade, similar to the way that asset-backed securities took off during the first iteration of the web. To summarize, by ensuring proper adherence to identity, jurisdiction, and asset category restrictions, digital asset securities have an opportunity to become a global, standardized mechanism by which regulated finance operates on Web3. Securitize is the leader in digital asset securities, and we will continue to pave the way for regulated finance's migration to this new world. Securitize is pleased that traditional finance has caught on, with virtually all major firms now investors in blockchain-based technology, or companies offering tokenized products to their clients, including very recently State Street and BNY Mellon announcing tokenized programs, and very exciting, JP Morgan announcing its first tokenized FX trade just recently. At Securitize alone, just within the past year, we've partnered with S&P, KKR, and Hamilton Lane to tokenize funds, with many more recognizable names coming soon. These firms are embracing blockchain as a means to reducing the barriers to investing in their products. including smaller minimum investments, easier funding, and immediate share issuance, and of course, earlier access to liquidity. These same benefits and more apply to crowdfunded capital raises. Investor identities can be pre-verified and stored or attested to in an investor's digital wallet, reducing steps and friction from the investment process. Shares can be issued immediately as soon as the investment is made, and again, stored in the investor's digital wallet. No law firms or notaries required. Shares also can be easily offered for trading on the ATS, enable liquidity far easier and earlier than ever before. Paper is eliminated from the process. Everything is accomplished via an e-signature at most, and many steps can be automated entirely, such as investors receiving their shares immediately after funding their investment. Shares can be accounted for at all times. Ownership can be instantly proven, and because these are digital, shares can be programmed to carry special rights, restrictions, or even perks. For many private market investments, it takes days to weeks to settle paper transactions. And even then, a transfer agent holds the record of ownership, not you. Tokenization changes this so that investors can truly own their investments as soon as they purchase them. At Securitize, our view is that blockchain is a fundamentally better way than using paper to raise capital, issue securities, and facilitate liquidity. And it is also our view that blockchain is not the what, but the how. And much as we don't any longer think about SMTP versus IMAP technologies for sending and receiving emails, or ACH for bank transfers, and most of us would be hard-pressed to explain how any of that works. We just know that it does work, and we take it for granted hundreds of times per day. Blockchain and decentralized Web3 world that is now emerging will be much the same. And 5 years from now, the idea that an investor can participate in a crowdfund just by scanning a QR code will be the norm. In fact, it's totally possible today. Tokenized crowdfunding, it enables businesses to raise capital and investors to access opportunities never before possible. All go through a QR code and a few taps on your phone. This is possible today, but it will become increasingly normal in the years ahead. Most business value is generated when companies are privately held, and businesses are now remaining private longer than ever. Private markets in general, and crowdfunding in particular, are an increasingly powerful means for individual investors to share in business value creation. And alternative investments such as these will become a larger and larger component in investors' portfolios going forward. And by extension, individual investors will become larger drivers of business growth in the months and years ahead, in large part due to crowdfunding. Thank you for taking the time to hear my perspective on where we are and where we are going. This is an incredibly exciting time to be involved in crowdfunding and in blockchain, and I am proud to be sharing this moment of opportunity with you all. Please feel free to approach me off stage with anything that I might not have been able to cover today or that you have questions on, and I thank you all for your time. Thank you.